Well, just journey on a Wednesday. That'll get you through the day. Thanks so much for joining the Investopedia webinar series. I'm Caleb Silver, the editor-in-chief of Investopedia. Delighted to be joined by Lisa Salvi of Schwab Advisor Services. We're going to talk about your 2020 RIA benchmarking survey. A lot of interesting results in there. We are delighted to have you, delighted to have Schwab, a good partner for Investopedia, another company that is rooted in financial literacy and education and helping make people smarter. You guys do a great job of that across the advisor platforms and across the classic site. So it's always good to be speaking to you and your team. And we're really happy to have you, Lisa. Thanks.
Thank you so much for having me here today, Caleb. It's great to get to catch up with you.
Cool. So I want folks to get to know you a little bit better. So I'm going to share the screen. We'll go through our deck a little bit here, and we'll talk about some of the findings from the benchmarking survey. Folks, feel free to put questions in the Q&A. We will get to those as they come up, if relevant to the conversation, or we'll get to them right at the end here. So let me see if I can get the screen sharing going, because I had it a minute ago, and then we will rock on with our webinar. But while I do that, Lisa, tell us a little bit about you. Tell us a little bit about the group that you work with, and we'll take it from there. Can you see our full screen? Are we back to full?
We're back to full. It looks great. Yeah, Caleb, hi. It's great to see you again. I am joining you from the Bay Area. So my home office is in San Francisco. It's very smoky here. So bear with me. It's just an unusual time period among many dimensions. I've been with Schwab for 13 years. I've worked in the advisory business almost that entire time. And I really lead a team who is responsible for working with advisors every single day in their offices, helping them improve their businesses, focusing on things like growth strategies and cybersecurity and leadership development. And really one of the foundations of the work we do with advisors is our benchmarking study, which is the industry-leading study, and just gives us such a huge amount of depth of knowledge about how advisors are running their businesses, how that changes as they grow, and things that they need to keep in mind as they continue to build their businesses for the future.
Yes, Schwab, very supportive of its advisor community, and a huge custodian also for so many advisors. But if you've ever been to Schwab Impact, as some of you may have gone in years past, it is basically the Super Bowl for financial services conferences, and it really is dedicated to those advisors that help make up your network. So it's a delight to have you here. Can't wait to get into the meat of the study here, and let's take it away. I, of course, am the editor-in-chief of Investopedia. Delighted to host this series, and it just gives me a great opportunity to talk to guests like Lisa and folks around the industry that really have their finger on the pulse. So let's get into the survey a little bit. You've done the benchmarking survey for several years. What were your expectations going in? And this is obviously a very unusual year for RIAs, for investors, for consumers, for basically everybody on planet Earth. But let's talk about the survey, the benchmark survey, and kind of what you expected going in and how you did it.
Yeah, great question. So this is our 14th year of running the study. And, you know, when we put it out there in January, we usually field it between January and mid-March. And so much changed this year. It was hard to know what to expect. We ended up extending the dates that advisors could send their replies, because March was just that time period of unprecedented volatility, shelter in place. Everyone's just trying to figure out how to run their business from their home. So many questions were coming up. So we were not sure what that would mean in terms of participation in the study. We were really thrilled and humbled that so many people still took the time to share so much data with us. So we had over 1,000 firms still participate. That represents over $1 trillion in assets under management. We're usually right around that range. The entire RIA, independent RIA industry is right around 5 trillion, about 4.8 trillion. And so this really represents about 20% of people in this business model. And not only do we appreciate so much the time they spend to give us this data, but we also sit down with firms and talk them through their results. We give them an individual peer report of data so that they can see exactly how they stack up, 45 pages of data, how they stack up against one of 12 peer groups. So we want to provide a lot of value for those who participate. And I'm excited to be here today just to share what we like to call our macro results, some of the broad findings and trends that we're spotting in the industry.
Yeah, I know we do a lot of our reader surveys, and it's very hard to get people to respond. So that's an incredible response. And that just shows you the the respect and the communication that your advisors have with you at Advisor Services. It's very fortunate for both of you to have that type of relationship, because you learn and then you're able to educate them. And if they didn't get anything out of it, as you know, you wouldn't be doing this 14 years running. So congrats to you, and let's get into the results. So RIAs were coming into the year feeling pretty strong. 19 was an interesting year for equity markets, to be sure, and for investors, but nobody, and I mean nobody, was expecting what happened to have happened. So talk about their vibe going in, and sort of what you learned through the survey process as they answered it over the few months that you ran it.
Right. So I think what I really like to call out with this slide is just advisors absolutely entered this year from a position of strength. A 9.25-year CAGR is enviable for any business, and you see that represented here. But the other thing that I think this makes you pause and think about is a median firm in the study was at $424 million in assets under management 5 years ago. And at the end of 2019, they were sitting at $761 million in assets under management. So when you think of over a 5-year period, the enormous amount of change every firm has dealt with in terms of growing their client base, growing their client assets, the number of employees they need, sometimes office space, tech stack, marketing strategy. Advisors are used to innovating. And I think that a focus on the client experience and that spirit of innovation are just underpinnings of this industry. And I think that is one of the things that in this COVID world that we've been all operating in has helped set them up for success. We saw people pivot their business models very rapidly and really serve their clients extraordinarily well through this time period.
Yeah, no doubt. And if, for folks that have been participating in our webinar series, talking to advisors about how they had to make that pivot, but what was so interesting, Lisa, was that many of their clients, by and large, of all age groups, were ready for it, and were ready for that technology interaction, and like Zooming almost more than going to the office for the visit or getting the paperwork in the mail. They were actually into, let's meet for 30 minutes on a Thursday at 3 o'clock via Zoom and go through everything you need. And I feel like a lot of advisors made that move, and you could see it in your results, and you could see it in the overall response across the industry. But you mentioned that big jump in assets under management and those combined annual growth rates. Incredible for this industry. Thank you, bull market. But also, the industry's been doing a very good job of catering more to the holistic needs of clients. We're going to get into that more as we look at more results from the survey. So good to know they came in with a position of strength, were able to pivot because everybody had to. Let's talk about how important it was for them to have that plan, that strategic plan, which seems obvious to so many people. But I know from talking to so many advisors that you get mired in dealing with your existing clients, trying to get new clients, the back end of your business, that the plan sometimes takes a back seat to just operations.
Yeah, and maybe what I'll just start with here is that label you see, top performing firms, where it says 75% of top performing firms have a strategic plan. We actually introduced a new feature in the study this year, which was the Firm Performance Index. So we engaged with our data scientist team and really wanted to get to the heart of the question that I get asked every single time I talk to advisors, which is, okay, yeah, these results are great, but what do I really need to do to outperform? Like, what do those firms do that really sets them apart? And so we isolated 15 different metrics that, when you put together, help us create this peer group, the top performing firm peer group, that is growing more, they're running their business very effectively, and a lot of the factors that they have in place lend themselves to really good firm valuations if that's something that they ever wanted to pursue. So top performing firms, you could be a firm of any size, you could be early in your life cycle, you could be late in your life cycle, but there's some commonalities of what they do. And so today, as we talk through, I think that's one of the most exciting things, is seeing some of these things that you can bring into your business and really make a difference. And one of them is having a strategic plan, something I'm very passionate about. We do a ton of work with advisors. And when I say a strategic plan, I'm not talking about a list of annual goals and objectives. I'm talking about a document that has purpose, values, long-term vision. We like to see a SWOT analysis in there: strengths, opportunities, weaknesses, and threats, and long and short-term goals. And something else I think is really important is, who are you assigning to each of those priorities? Who's going to run that project or that priority? And if you have too many things for the number of people in your firm to really do effectively, it's probably not going to get done. So maybe narrow down your list a little bit more and focus on those things. Have someone run it. A lot of larger firms are starting to have some of their future partners or G2 leaders start to run those priorities so that they're practicing something a little different than their day job in terms of leadership ability. So there's a ton you can do with your strategic plan. Nobody's strategic plan ended up being accurate for 2020. We know that. So we also are seeing a huge number of firms want to sit back down, take a look at it, reevaluate this world we're living in, and start to rethink this for 2021 and beyond.
Yeah, I mean, these are small businesses effectively. So it's not, you know, the operations may be very different, but the planning, the vision, the North Star, and then, as you mentioned,
Right.
who's in charge of that? Who are we delegating that to? Because as you know, and I know, and anybody on this call knows, you have too many priorities, you have no priorities. So it makes sense. And then it's not just for growing the firm, but we look at what's happening in the acquisition space among RIAs or in the roll-up space among RIAs, and there, you know, the valuations are high. There, it is a market that is very hot right now for these types of businesses because of the growth that you mentioned, because of that that cash flow that comes through it. But these are businesses that deal with people, and these are important relationships. So it's good to see that strategic plan being emphasized among your winners. Let's talk about their priorities. It's always the acquisition of new clients and the acquisition of clients through various marketing channels or referrals. That's always paramount for advisors. They're constantly having to do that to grow. No surprises there, but in terms of some of the other priorities that you saw and the initiatives, any surprises there or anything you want to call out?
Yeah, you know, I kind of jokingly say no news is news here. And the reason I say that is because about 75% of the firms who participated in our study completed the study after March 1st. So most firms were giving us this information with the backdrop of the pandemic, of volatility, you know, working from home, and really trying to think that through. So I was actually a little surprised by the consistency in the answers, with new growing through referrals being the top two choices yet again, even a little bit stronger of a response than previous years. And I've really seen that with advisors. They're staying very focused on growth. Of course, their first priority is just serving their existing clients incredibly well, helping them through this time period, you know, going above and beyond in some cases with, you know, screen sharing and talking an advisor through how to join a a client through a Zoom meeting, or how to do something online, do a digital approval or something like that. But they're taking care of that, and then also getting some more outreach from people who maybe have been self-directed through this bull market, and are just kind of saying, you know, it would be really nice if I could talk to someone who is an expert. It doesn't always mean that new business is closing right away, but there's certainly a lot of conversations happening relative to growth. So no news kind of is news when you're in such an upside down world that we're in today.
Sure. And the you know, that never-ending quest for more referrals and more clients is just a part of the nature of the business. It's interesting to say a lot of them are trying to recruit, and we get to this later in the benchmark survey, but recruiting staff, adding to their capabilities, becoming more holistic in the planning that they do is a theme that comes up over and over and again in this survey, and we'll get to it a few more times. But it's interesting to see the things that they prioritize the most, especially during such a chaotic year. Let's talk a little bit about targeting and how they're trying to and trying to grow those organic assets in their markets. They want that net organic growth, right? So what does that mean for advisors, and what are some of the solutions some of them have pursued in order to achieve that?
Yeah, you know, you and I both brought up the fact that we just had a really nice run of bull market several years in a row. And so if there's really one metric I could have an advisor make sure that they understand for their business, it would be their net organic growth, because that's more controllable. That strips out market performance. I think it's a little more indicative of how well your client experience is resonating with clients, and how well you're doing telling your story to the types of clients you really want to serve. So here's another example where top performing firms are just doing exceptionally well because of some of those practices and disciplines that they have in place in terms of strategic planning. We'll talk about some more of those later today. So understanding your ability to acquire new clients and your net organic growth is really good for firms, so that they can really have an accurate measure of how well they're they're resonating with the types of clients they're trying to grow their business with. So that's kind of the story there. And you can see there's good results across the board, but there's always room for more.
Right. And you see it in the firms that have less than 250 million and those that have more. So it's kind of a nice balanced approach. You see the growth on both sides, which is refreshing, because for years, people were concerned this industry did not have room to grow. Of course, nobody can predict the future and what was going to happen over the last several years. So it's good to see the industry doing well. And I love to see those results coming through your survey. Let's talk about this persona targeting, having this idea of the ideal client for your RIA. Now, RIAs, love all clients, but there are some that are more specialized to others. How important was it for them to identify that, and how do they go about doing it?
Great question. So back to that question I always get, right? What do I do to outperform? I am convinced that this is a huge differentiator for the firms to take it really seriously. So firms that have a documented ideal client persona, and I'm going to unpack that term just a little bit. That doesn't just mean, self-directed and you have a certain number of assets. That means that you have really sat down. We do a lot of work with advisors of all sizes on this. You've sat down and you've thought through what are the demographic characteristics of your ideal client? What are the psychographic characteristics? What do they value? Like in their terms, what do they value? What are they worried about? So the firms I see that do the very best job with this go pretty far. They actually name their ideal client. So they would say something like, our ideal client is Sally Smith. She's 45 years old. She's a Fortune 500 executive. She lives in the Bay Area. She has children and she's worried about aging parents. And once you start to have all of those factors about Sally Smith or whoever it is, leaders can start to say things to their teams like, okay, but as we're evaluating this marketing strategy, how would Sally want us to communicate? Or what kind of content should we write for Sally? Or what kind of technology should we have? Is Sally pretty comfortable and digital savvy, or does she want us to talk her through it? Should we provide maybe a tablet to our new clients that has everything preloaded? It's got Zoom, it's got their portal for our firm, it has login. Would that be a differentiator? Is that worth, us spending $500 because it's going to be something she's going to go talk about to people she knows because we've made it so easy. So when you sit down, you develop that ideal client persona and you really design your business around that person and you get your team thinking in that mentality, you see these results, 28% more new clients, 45% more new client assets. So that's an incredible differentiator for firms. And the ones that do it really well, you could be really small, you could be really large. Smaller firms tend to say things like, well, I'm in growth mode. I have a lot of capacity. Are you really telling me I should turn away a client who's not Sally Smith? And our answer would be maybe not yet, but you should be really clear on why you're taking clients that aren't pretty close. If it's a dartboard and Sally's your target, is it still on the dartboard or are you getting close? Because you're going to really resonate for the type of person you're building your business for.
Sure.
They're going to understand your client value proposition and you're going to see some pretty great results over time. Right.
And P.S. all great businesses do this. So if you don't think Nike or Lululemon or even Schwab, the mothership firm doesn't do this, this is what happens. And you want to, we have what we call in marketing, the if then statements. We want to build the best for us website that informs people about every financial decision they'll ever have to make in their lives. You want to have that Mad Lib statement for what your business is all about. And if you're an RIA, we want the ideal to be able to educate and help clients like so-and-so do it so-and-so to become the best so-and-so they can be. You start putting those words together in a persona like this, and everything sort of has to fit into that prism, but the results are there. So it's very interesting to see that. Very cool. Great. Let's talk about some of the other things that RIAs were focused on. They're talking about value-added services, and we've been doing this webinar series since the beginning of the year, basically. But even when we first really started having conversations with advisors over the last several years, this move towards holistic financial planning. It's not just asset allocation. It's not just pick my ETFs for me and send me my statement. It is this whole life experience that RIAs are now having to solve for their clients. And you can see that manifesting across your study here, but also in just conversations with them, right?
Absolutely. So what this is showing us is the number of firms that offer these services and how that's grown over a 5-year period. So you can definitely see firms are adding more services. Again, I would want a firm to look at this through the lens of their ideal client and not just add a bunch of services, but add ones that are really going to resonate or going to make them stand out even more to the types of clients they're building their business for. But the side effect of this is something interesting too, which is firms are not changing their fee. So they're earning the same amount, but offering more services, and that can feel like a little bit of margin compression within the business in some cases. So just keeping an eye on this one. Make sure you're adding things that are really going to resonate for that ideal client is great. But to your point, some of the investment management pieces are not so much the differentiator like maybe they once were. A lot of times it's the additional holistic planning, it's the relationship management, and it's the value-added services like some of these that you see that are really helping firms to stand out in the marketplace.
Yes, if you want to build a client for life and then have their kids and their kids' kids join your firm, offering some of these services is a great gateway to teaching them financial education, teaching them about their situation, showing them that you are the firm, the place where you can help with those solutions. This just makes sense across the boards, and it's a movement we're seeing everywhere. You know, there may be margin compression here, but they will save it on real estate, as many of these firms may not go back to big offices anymore. So
that's a great question for next year. Yeah. It's just what is the future of geography and real estate in the new economy?
Right. I mean, I've talked to many advisors who can't wait to get back into the office because it's a refuge from maybe working from home, and it's a nicer, even place to meet with clients. But others are like, actually, this works pretty good and helps with the lifestyle. P.S. I'm saving $5,000-$10,000 a month on renting that office in the strip mall. So we're going to see an interesting shakeout this year. The feedback, right? This is crucial in any business, but how important was it is it for RIAs to be listening to their clients, gathering data on the choices that they're making, really understanding what they're doing on a granular level, but also on a subjective level, just in conversation, to really know what their needs are?
Yeah, so this is actually a new question this year. Every year we have one section and we change the topic. So this year we had a focus section on client experience, which ended up being perfect for the environment we're in. And this was one of the questions, like, what kind of touch points do you have with your clients? And it's no surprise that advisors are very in tune with what their clients want. That's kind of what has driven many people to either start a firm or join a firm, because they're so driven by just providing incredible client service. But one of the surprises and findings that we found was firms who are doing interviews with their clients actually have lower client attrition rates. And the client attrition rates for advisors are incredibly good. It's usually right around 90%, 98% of firms, so only 2% client attrition. And some of that's just for various reasons, like clients moving away. But I would say if anyone's out there listening to this and they're starting to see their client attrition go a little higher than they would want it to be, I would say having a strategy in place where you have a set of questions, where you're checking in with your clients with some purpose and intention, and everyone's asking the same questions, you're getting some findings and some feedback, that can be a way to get in front of it. So that would be a key point for firms that are losing more clients than they would like to see.
Sure. As a client of an RIA, those questions and conversations bring up all kinds of stuff, right? Because you start thinking about things you hadn't thought about. A great RIA is able to frame those questions and have that conversation in a way that really makes you think about your own North Stars or your household's North Stars in terms of where do we want to be? What's the point of all of this besides accumulating money for retirement and taking care of all those essentials? You do a lot of learning about yourself, and it's fascinating. Folks, we're talking to Lisa Salvi with Schwab Advisor Services on their 2020 benchmark, RIA benchmark survey. Your questions are welcome. I've gotten a few already. Feel free to ask away. We'll get to them as we can. Just fascinating stuff here. So let's talk again about some of the priorities in terms of the growth in assets for some of your top performing firms, right? The growth, when you look at it in terms of how they're getting it, is an interesting breakdown. Take us through this and take us through this in terms of what firms were doing that was more successful than other tactics.
So the interesting story here is that those top performing firms that we've been talking about today, those ones that are outperforming in terms of growth, but also are taking the time to do some things like defining their ideal client persona and thinking about their client value proposition, they get better results, almost 2 times the results across the board in terms of their marketing efforts and strategy. So we always talk about client referrals. That's still the largest growth factor in our industry. COI referrals or centers of influence referrals, so those trusted professionals that you really build a deep, long-lasting relationship with, and hopefully it's mutually beneficial. Those continue to drive a really healthy amount of new clients, but also just your other marketing strategies. And there's more and more stories coming out about how clients are finding firms not just through word of mouth referrals, but also through things like finding their website and finding it really compelling. We're seeing some firms do some really interesting things with some really simple SEO. So one example I could give you is a Bay Area firm who has a lot of Fortune 500 executives in their ideal client mix. So they've served those clients for many years. They tend to be in their 40s. They tend to think they have about a decade of employment left before they retire, but they noticed that in this environment, quite a few of them are getting offered early retirement packages and calling them and saying, well, how do I think about this? This is not in my financial plan, but I think I need to evaluate what this looks like and what that would mean for me and my family over the long term. And so because they were paying such close attention to that pattern, they just did some really simple paid search so that when people in the Bay Area started to search, can I retire early, their firm would pop up, and they started to get more and more outreach just through that. Also through their channel of just serving those clients really well. So when you know who your ideal client is and you're paying really close attention to the things that continue to matter to them, you can supercharge everything you see on here. You can get more of your existing clients telling their friends that they work with that are in the same boat as them about your firm, and you can do some pretty simple things with digital marketing that can really lead to some new business generation, which is exciting to see.
Right. And we all know that me telling my friend, hey, I have a great woman I work with who's my financial advisor who helped me sort this problem out is worth, $100,000 in SEO money or direct marketing money. But you
Right.
have to have all those bases covered. And not a surprise that one of the top questions we get on Investopedia is, can I retire early? And I was mentioning to you in our pre-call that one of the top searches we got as the market was recovering like crazy in April and May was, and people were getting buyout packages was, how do I cash out of my company's options, or how do I defer tax on options grants or things of that nature. So you could tell just by folks looking through our site that this phenomenon was going on. So good for that firm for getting on top of it, because there was definitely a spree of that happening. But we get a lot of questions from advisors, and we used to have a platform where they could market their expertise by writing articles, and everybody wants to publish on Investopedia because we reach a lot of folks. But what do you recommend especially for those new firms that are starting out and they want to establish themselves through digital marketing? Are there any 2 or 3 recommendations you can make to some of the folks who might be listening here who are in that very boat?
Yeah, great question. So first and foremost, you have got to have a good website. And that's like the center of all of your digital marketing efforts. Even the referral story you just told, if you told your friends you work with this great person, probably the first thing they're going to go do is go check out the website and see if it resonates, to see if it seems like that firm is designed to work with them. I've been saying your website's the new front door to your office building, so you should really make sure it's telling a compelling story. There's 2 pages people always look at. It's the About Us page and the bios. So you don't even have to tackle the whole thing at once, but try to tell a story on there. Try to tell a story that really brings to life in a compelling way what makes your firm special, why you do what you do. Almost every advisor has a story that's just infused with so much passion and resonates when they tell it in real language. And try to think like you're talking to your ideal client, so that when people like that show up, what you want them to say is, I feel like this firm was designed with me in mind. I have to call him now that, now that Caleb told me about them and I look at this, this is exactly what I've been looking for to solve a problem. So I'm going to pick up the phone and actually take an action. So first and foremost, make sure your website is good. Make sure that if I looked at it, I could tell who you built your business to serve. Really simple SEO stuff. Just make sure like you're in the local 3-pack, you're showing up on that first page at least of search results when someone looks for a firm in your area. Won't get into details on that, but there's people you can hire that can do some pretty simple work. And then the last thing I would say, it's really tempting for a lot of firms, especially in environments like this, to try to go, oh my gosh, I have got to do digital marketing, so I'm going to try to launch a podcast, I'm going to do a blog, I'm going to do some webinars, and maybe I'll write an article. That's too much usually. Really think about what you can commit to. Maybe you write an article that's about retiring early and evaluating your stock options or something like that. And then you take little pieces of it. You can put it in your newsletter. You put it on your website. You can email it out. I've seen a lot of firms have really good results with video through this time period, really high engagement levels with video. So they might send a short little 2 minutes of them talking about the topic you just brought up. And then they're seeing their clients send those on and say, hey, that was a great video. And they send it to someone and that can generate outreach and a referral. So don't try to boil the ocean. Start with something that really matters and do it well, and then kind of atomize it in multiple different locations.
Sure. That's what we recommend as well, because everybody, my inbox is, 50 a day of advisors or financial professionals wanting to publish on our site. It's like, you got good content, create your own domain. I get the interest. What about that social media aspect of it all? There are some firms out there that have been able to use social media, YouTube show, an Instagram live post, Twitter live, or just conversations. They use it to show their thought leadership, but also as a marketing tool. It's not for everybody, but it does work for certain firms that have the right personalities, but also they focus that material, even though it's not upselling you, it is informing you, which is probably the more attractive way to come in the front door. Does that work?
Yeah. We get that question all the time, and I think you kind of just answered it perfectly, which is first think about where your ideal clients are. If they're going to find that valuable and they're going to engage with it and that's going to mean something to them and be a good communication strategy, do it. If you're working mostly with retirees who never go on social media and that would mean nothing to them, then you might find other tactics that you're going to get a better ROI on than focusing on social media. So think about it through the lens of that ideal client and what you're trying to accomplish with your firm and growing your business, and then put your energy around the things that are going to matter most for the types of clients you're trying to attract. Right.
Hold off on that TikTok video series and identify the persona, and then find out where that persona hangs out. They might just be at, the country club, or they might just be in a group, a community where you can reach a lot of people who are actually interested in the same thing. But you're right. If you just start going willy-nilly down the social media train, you will create a lot of media that nobody will see, not even your kids. Let's talk about some of these, the business functions of being an RIA, because what a lot of people don't realize is, it's just hard enough running the practice itself and dealing with clients and helping clients and trying to attract new clients and marketing your business. But the back end of an RIA business is the plumbing, and it all matters. You can't shortcut anything. Let's talk about how they're centralizing these functions. We know technology has been a huge factor here, but how are RIAs one after the other trying to tackle this problem according to your benchmark survey?
Yeah, I touched upon some of the margin compression that firms can feel a little bit just from adding more services and providing a lot of high-level service to their clients. But the other side to that is there's been such huge technology gains. I mean, there's so much more you can do with your tech stack, and also with centralizing functions that can really lead to some great results. This particular set of data is split out by smaller firms and larger firms. So you can see larger firms are more likely to centralize different functions within their business. And I would always recommend, as you're thinking about growing your firm, as you're growing more and more, think of ways to add workflows that are going to make sense. Think of a way to bring in a new person and be able to actually train them so that they can do the whole job and you have that key person risk. And centralizing the functions can be a great way to gain back some of that operational efficiency that you need in a business as you grow.
Right. There are so many technology providers trying to service this industry. If you've ever been to Impact, like I've gone many years, you see a whole section of the conference center that is devoted to these folks. There's tons of great technology out there that I know is incorporated into your suite, but also just available off the shelf too. So that's obviously an opportunity for efficiencies and for better client services overall. The notion of bringing in that expertise, whether it's on a full-time basis or a contract basis, to make sure you have those gaps plugged, how critical is that, especially to some of these business functions?
Yeah, one of the first specialized roles a lot of firms add is an operations manager for that reason, so that the client-facing folks can focus more of their time working directly with clients, and then they have someone who's really thinking about that operational efficiency. As firms grow, that tends to lead to like a COO type of role, so it's definitely important. We've been doing a lot of interesting work with firms, and I think this will actually even be stronger in the next year, around doing client journey mapping. So helping everyone in the firm sit down and take one specific workflow and unpack exactly what that looks like from the client's perspective. And every person in the firm gets to sit in there, from like the CEO down to your newest hire, and talk about what role they play, who puts it in CRM, you know, who communicates to the client, and we map it out with swim lanes. And then we help the firm think through, where is this a really big positive and where is there room for improvement? And it's not just about efficiency. I think that's a big part of it, but it's also about making sure that you're designing the client experience you really want to deliver. And that's kind of what gets all those different roles excited. What we tend to see is that firms start to reassign some of those roles within the firm. So they will make the workflow work a lot better from a back office perspective. They'll make it work better to the client and the way the client experience and interaction with the firm. But they also tend to give their more junior associates more responsibility and free up some of that really expensive time of their client-facing senior partners. And it helps them with their career path and how they think about that as well, and how they train people on more and more things within the firm. So the reason why we've done a lot, but I think we'll do more, is just because we're all adjusting to this virtual world where we're doing more interactions virtually. We're doing a lot more digitally with our platform, with our clients. And I think we're seeing that that's really here to stay. That adoption of digital solutions is here now, and it's going to grow more and more over time. And firms want to really bring that into the way they're intentionally doing their business, and not just have it be something they did in response to the pandemic. So yeah. I think that's healthy and pretty exciting to see that.
Right. That flows perfectly into this next slide, which is, yeah, this is the way it's going to be for a while, whether we are going to be working from home for another year, 2, 3, whatever, it doesn't matter. Yeah. This is the way we will communicate between advisor, client, planner, client, doctor, patient, unless we absolutely have to go in. This is just it. So firms that were in early on that obviously had a head start, but everyone has been forced into the boat, so to speak, Lisa. So talk to me about some of the strategies that the firms were implementing at different sizes to pivot to a full digital experience, and other recommendations that you might have that Schwab Advisor Services has to help them do that even more efficiently.
Absolutely. This is another one I got excited to see this year. So that top performing firm group, the top 20% across the board, they're very likely to have a lot of digital touch points already in place with their clients. So I think that's really helping those firms step into this virtual environment we're in even more effectively. This is one of those data points I really am very interested to see what this looks like a year from now. You know, if we're back having this same conversation, we can see how much this has grown, because we've seen a tremendous amount of adoption in all of our digital solutions, our digital account open at Schwab. Now that the end clients of advisors and advisors really know how to interact with those tools, I don't see it going back. It's more secure to do it digitally. It works better. So we're excited with that momentum and that trajectory. And I expect to see it grow. I also think firms are thinking this through the lens of the ideal client a great deal. So virtual client meetings, I mean, that number is going to grow, right? Next year, we're pretty sure everyone's going to be pretty close to 100% there of offering it at least. but firms are really trying to think through how to nail it and how to do this really well. And, you know, there's interesting stories about firms that are in multiple states, like 4 different states, and they're normally visiting some of their clients with their, you know, their suitcase, and they're coming in for the day and they're doing a meeting and they're trying to maximize their travel time. And they actually really like it. They like the fact that they can do a Zoom meeting, and they feel like even when we're back into a in-person world again, they would rather go in person and have it be more of a relationship building type of activity and still do the, you know, the client review meeting via Zoom, or even in some cases, I'm seeing firms use video to do some of that portfolio review ahead of time, so that by the time they get on Zoom or they're talking, they're connecting more and talking more about the deeper issues and not just what they experienced with the portfolio. So I'm seeing some really interesting ways firms are trying to do a great job making this Zoom connection feel like a real connection, and how they're thinking about it for the future as well.
Yeah, I mean, it's come a long way since, you know, the middle of March, where we were all just trying to get it to work, to where you're seeing some pretty dynamic presentations by RIAs. And I love that point you made. You could see a world in which we have our review with my advisor, we go through the portfolio, we go through moves that were made, but then when we can visit, maybe even these days, a distant visit in the backyard, we can actually talk with the family about those North Stars, those longer term priorities, the needs, you know, healthcare, college planning, moving, whatever that is. Those may be more appropriate for that in-person casual conversation, but not let's go through the numbers, because it's much easier to do it here. And it would take us weeks to set that up in the old world, where I couldn't find a half an hour or an hour to break out. I can do that really easily right now. So this is here to stay and only going to accelerate. Very cool results here. This is the slide that I was very fascinated to read, the hiring that's going to go on in the industry. There was concern, I know several years ago, I'd been to the FPA forums and the CFP gatherings, where they were concerned about the future of the business and young people getting into it. But what your results say is that there's going to be a lot of hiring, whether that's new talent, people coming out of into the industry for the first time, or existing advisors bringing their book of business with them. Take us through the results here, because they're fascinating.
This is another one I was just waiting to see what I was going to say this year, because most firms were answering the question after COVID set in. But normally we see about 75% of firms saying they're going to hire in any 12-month period, and that stayed remarkably consistent. So I think firms are still thinking they're growing. They have a lot of demands on their time to spend time communicating and serving their clients. They still anticipate having a lot more clients join the firm, and so they need that talent to keep up with it. So you brought up a good point, and maybe it's just because you and I are used to talking at Impact, but you know, we spend a huge amount of time working at the university level, just trying to raise awareness of the RIA industry. We always invite about 80 students to join us at Impact. We're looking to create a lot of awareness of this incredible profession. It resonates for young people when they hear about it. They just don't always hear about it through their financial planning programs. So this is near and dear to my heart. I would encourage advisors to go talk to a high school or a college about what their firm does, that it's not, you know, smile and dial. It's about helping people live a really fulfilled life. It resonates so much, and this is one of the industries that's continuing to look to hire as well. So finding that young, diverse talent that's going to help build the future of this industry is important, and we're having a lot of firms reach out to us to say, you know, what can I do to get involved? And a lot of it is talking to groups of students, offering an internship, even in some cases if you're not hiring, and just telling the story out there. I think it really matters, and it resonates a great deal. Right.
And the definition of what it really means to be an investment advisor right now, I think, is really metamorphosized over the last several years as our needs have grown. We're living much more complex lives. Again, it's not just the asset allocation. That's important, but there are a lot of products you can do that with yourself. It's the relationship part of this, and actually helping people. I think many people would find fulfilling if they just knew it. If you just say, oh, my dad or my mom's, she's in finance, but you don't actually say, no. They're an investment advisor that helps people plan their financial lives. That's a much more compelling story. So great to see this slide. And I know we're a little bit over time here, but it's been a fascinating conversation. Just, you know, advice, and I've thrown in some questions as I've come along, but advice for those folks who on the call that are just starting their firm or just getting into this business, give them 2 or 3 things that are just key things they have to master before they really launch.
The number one thing, and I'm very passionate about this, is know who you're building your business for. Have an ideal client persona. And for anyone who's listening, if you custody any assets at all at Schwab, we have a program that will help you do that and guide you through that process. So make sure that you take advantage of that. Have a strategic plan in place, even when you're small, and don't get, lots of entrepreneurs are so great at having great ideas and being super innovative. And I love that. I think that's one of the brightest spots in the industry, but the other side of that is it can be really easy not to see anything all the way through. So making sure that you have 1 or 2 things every year that are just your, I have to accomplish this to grow my business piece of it. And that you're working those things all the way through to completion. Even if it's just 1 thing, I'd rather you do 1 thing really well all the way than start 10 things and none of them get all the way done. And then the last one would be, I think it's hard to think of anything more important right now than having a good website. We took a look at about our marketing partners within advisor services, looked at over 100 advisor websites about a year ago. And it's hard to tell often the difference between what these firms do or who they're building their business for. And so if you know your ideal client and you get your website to a place where you're telling that story, and it can be simple. You don't need a lot of copy. You don't need, it's almost better to have it be less is more approach. But if you're saying something that's going to resonate for the type of client you're building your business for, I think you're really going to stand out. It'll generate more referrals and hopefully just make you build that reputation that's really going to turbocharge your growth.
Great stuff. And thank you so much. We're back on camera. I'll stop the sharing now. Fascinating results. It's really good news, actually, if you're an RIA or if you're thinking about doing that or breaking out from Wirehouse or whatever it is. The results here show that there is some optimism in the industry despite the chaos around us on all sides. So I really appreciate you joining us, Lisa, and sharing the results here. And I wish that this fire would end soon and continued health for your team. And I know it's been a dislocating year for everybody, but we appreciate the time and the knowledge sharing.
Thank you so much for having me. Love these conversations.
Of course. And for folks, I think your benchmark survey, is that available for folks who want it on Schwab Research? And we'll
yeah,
put
there's
it in
information.
Our newsletter.
And then also I would say next January, we'll open it again. So if you want to participate, we would love to help share really specific insights back to you about your firm.
Cool. Thanks so much. And thanks to those of you who joined us on this webinar, on the Investopedia webinar series. I'm Caleb Silver, the editor-in-chief of Investopedia. That's Lisa Salvi from Schwab Advisor Services. Thanks so much for joining us, and we will see you on the next one. And don't stop believing.